Hello students, welcome to Accounting Explained at Account.Wise Academy. This is Latha Venkateshwaran. We are going to see how to convert single entry to double entry. This is called the conversion method. Conversion of single entry into double entry involves the complete process of journalizing. We have to journalize, posting in the ledgers, balancing the ledgers. After all these things, we have to prepare the trial balance. Like for any organization, normal organization, what we will do, the steps to be followed are journalize, post in the ledgers, balance the ledgers, and prepare the trial balance. Same steps we are going to follow for conversion of single entry to double entry. Okay. Then final accounts are to be prepared. Okay, before preparation of final account, what we have to do? See, before preparation of final accounts, if any information is missing, it should be ascertained by preparing the relevant accounts. Take for example, debtors account. If in this account credit sales are missing information, okay, then this account has to be prepared and balanced, and the balancing figure will be the credit sales. Then preparation of final accounts can be done. What are the steps to be followed in the preparation of final accounts? There are two steps. What are they? Yes, preparation of trading, profit and loss account. Why this account is prepared? To find out the profit or loss of the organization. Then second step is balance sheet. Why do we prepare balance sheet? To find out the financial position of the organization. Steps for conversion of single entry to double entry. Start with the opening statement of affairs to determine opening capital. If opening capital is missing, then we have to prepare opening statement of affairs and find out the opening capital. I have explained elaborately about statement of affairs in my previous videos on incomplete records. I will share the link of the videos in the description box. You can go through it to have a thorough knowledge of statement of affairs. Analyze a cash book to identify missing balances. If any balances are missing, then we can prepare the cash book and find out the missing balances. Similarly, if any expense is missing, we can find out drawings withdrawn. If anything if we have missed out, then cash book can be prepared and found out as a balancing figure, or if any additional capital we have introduced, cash book can be prepared and that additional capital or capital introduced can be found out as the balancing figure. Next, prepare ledgers for debtors, creditors, bills receivable and bills payable. These accounts help in finding out credit sales. This I have explained previously. Similarly, if we prepare the creditors account, we can find out the missing figure of credit purchases, or if the opening or closing balance of creditors are missing, that can also be found out as a balancing figure. Calculate. Now next step is to calculate total sales. So we have found out the credit sales, we know the cash sales, add the credit sales with the cash sales, you get the total sales. Similarly, we know the credit purchase, we found out the credit purchases. Now to find out the total purchases, add the credit purchases with the cash purchases. Total purchases will be found out based on the ledgers and cash book. Okay, with nominal account. Nominal account consists of expenses income. Information from the cash book. Nominal account information can be taken from the cash book. And real account balances. Real account are assets and liabilities are provided to prepare final accounts like the income statement, that is the trading and profit and loss account which we saw, and the balance sheet, these two. Okay. Format of total debtors account. Okay. So this is the format of total debtors account. Total debtors account will have a debit balance. So opening balance will come on the debit side, to balance brought down. Next, if you have received cash from the debtors, then that will come on the credit side, cash receipt. If you have received any check by bank, that will also come on the credit side. If you have allowed discount to the debtors, that will come on the credit side. If we have got any sales return from our customers, that will come on the credit side. Bad debts, if we have incurred any bad debts, that will come on the credit side. Bills receivable on the credit side, if we have issued any bills to our customers, then that will come on the credit side. And the balance carried down, closing balance will also come on the credit side. Coming to the debit side, to sales, credit sales, if any, will come on the debit side. To bank, if the checks we have received that has got dishonored, then that will come on the debit side. And to bills receivable, bills dishonored, if the bills which we have issued has got dishonored, that will come on the debit side. Okay. So if any of these figures like credit sales, any one of these accounts, credit sales or cash received or bank account check received or closing balance or opening balance, if any of these balances, any one of these balances are missing, then that can be found out as the balancing figure. Okay, by preparing the total debtors account. Format of total creditors account. So this is our total creditors account. It is just opposite to the debtors account. Here the opening balance will come on the credit side. By balance brought down, opening balance. On the debit side, we have cash account. To cash, that is the cash paid to the seller. To bank, check issued to the seller. To bills payable, if we have accepted any bill from our seller, okay, then that will come on the debit side. Discount received, if we have received any discount from our seller, then that will come on the debit side. Purchases returns, if we have returned any of the purchases to the seller, that will come on the debit side. And finally, to balance carried down, closing balance will also come on the debit side. Here on the credit side, by purchases, credit purchases will come on the credit side. By bank account, if the checks which we have issued got dishonored, that will come on the credit side, checks dishonored. See, by bills payable, if the bills which we have accepted has got dishonored, that will come on the credit side. Bills payable will come on the dishonored, will also come on the credit side. And similar to the total debtors account, if any of these balances like cash or bank, one of these balances, okay, or bills payable or credit purchases or the closing balance or the opening balance, any of these balances account are missing, then it can be found out as a balancing figure. Okay. Now we will see the format of bills receivable account. So this is our bills receivable account. It will have a debit balance, to balance brought down, then to sundry debtors, that is the bills that we have issued to the sundry debtors will come on the debit side. And on the credit side, by cash or bank, if this bills that have been honored, that will come on the credit side by crediting cash or bank. Then sundry debtors account, if this bills has been dishonored in the bank, then sundry debtors will be credited, that will come on the credit side. By balance carried down and closing balance will come on the credit side. Again, if any of these balances, if sundry debtors is missing, or if cash or bank is missing, or if the opening balance or the closing balance is missing, it can be found out as the balancing figure. Format of bills payable account. Bills payable account is opposite of bills receivable account. So it will have a opening balance on the credit side. By balance brought down on the credit side. By sundry creditors, if we have accepted any bills, then it will come on the credit side. If we have received payment for the bills which we have accepted, then it will come on the debit side. To cash or bank account, bills payable paid. And if the bills which we have accepted has got dishonored, it will come on the debit side. To sundry creditors, debit side. To balance carried down, closing balance will also be on the credit side. If any one of these figures like cash or bank, sundry creditors, opening balance or closing balance, anything, if any one of these figures are missing, then it can be found out as the balancing figure. Let us see how to solve a problem. Ascertain credit sales and purchases from the following figures. Debtors, information they have given, and creditors, information they have given. Opening balance of debtors 10,800, cash received 36,850, discount allowed 2,000, bad debts return of 450, returns 800, that is sales returns, bills receivable received 8,400, bills receivable dishonored 600, closing balance of debtors 8,700. Opening balance of creditors 5,900, cash paid to creditors 24,800, discount received 450, returns, that is purchase returns 540, bills payable issued 2,860, and closing balance of creditors of 6,200. Here we have to find out the credit sales. That will be our balancing figure. Here we have to find out the credit purchases, and that will be our balancing figure. Okay. Let us see how to solve the question. First, let us prepare debtors account. So debtors account, see, opening balance of 10,800. To balance brought down 10,800. Next, cash received 36,850, by cash 36,850. Entry is yes, cash account debit to debtors account. Discount allowed 2,000. Discount allowed debit to debtors account. So by discount allowed 2,000. Next is bad debts return of 450, by bad debts 450. Returns, that is sales returns 800, by returns 800. Bills receivable received is 8,400, by bills receivable is 8,400. Bills receivable dishonored is 600. So bills receivable, this gets dishonored. So entry will be debtors account debit to bills receivable. This is opposite of the bills receivable account. So to bills receivable it is 600. Last one is closing balance of 8,700. By balance carried down 8,700. When you total both the sides, you get credit side as more. So 57,200 credit side total, we take it on both the sides, and on the balancing figure we get the balancing figure, missing figure is credit sales. That is what we have to find out, and that is 45,800 is our credit sales amount. Next we have to find out the credit purchases. For that we have to open the creditors account. Creditors account opening balance is 5,900, by balance brought down 5,900, cash paid to creditors is 24,800, entry is creditors account debit to cash 24,800, discount received is 450, creditors account debit to discount received, on the debit side 450, returns, purchase returns is 540, entry is creditors account debit to purchase return, so to returns 540, bills payable issued is 2,860, entry is creditors account debit to bills payable, so to bills payable 2,860. Next, closing balance is 6,200, which will come on the debit side. To balance carried on 6,200. On seeing, we find out that the balance of debit side is more, so we take it on both the sides, which is 34,850, 34,850. On deducting from the credit balance, we get a closing balance of 28,950. That is the balancing figure, which is our credit purchases. So credit purchases is 28,950. We have found the credit sales as rupees 45,800 and credit purchases as 28,950. With this, we are completing today's video. Do like our video and share it with your friends if you find it helpful. Subscribe to our channel, which will encourage us to make more videos like this one. If you would like to inquire about the accountancy classes which I take, or to get more worksheets for problems with solutions, contact us at acct.wiseacademy@gmail.com. Thank you for watching.